This conference will now be recorded.
Okay, so as you're working on this, somebody would work on the cash budget and probably sales. Then someone else would work on the production budget and probably raw materials and labor. Then you have the manufacturing overhead budget, administrative expenses budget. Somebody could work on that, and somebody could work on the capital expenditure budgets. Some of these budgets do not take a long time, 5 or 10 minutes, and we'll look at that today. Then you do the cash budget where you determine what you need to borrow. So we will try to finish this problem today. We'll take as much time as we need to get this finished. Then I'll be in office hours tomorrow at 3 in case you need some help and support, because it's based on your project and your numbers. So it's all different from everyone. And of course, on Thursday, when you turn in that first year, you also will be showing the class the project you made. So remember, you had to make a project, so you show that to the class, and you'll be turning into me your whole first year, which is what we have today. So you got to have assumptions in there about, the quarterly sales, what they're going to be. You can use these, okay? You got to get a selling price. You got to have a collection, whatever. I think I told you to use 10% for bad debt. So your collections need to be 50% and 40%. So just use 50%, 40%, and that'll leave your bad debts at 10%. Leave your desired ending inventory at 50%. Then raw materials is your thing. Okay. Labor is your thing in terms of, now on the raw materials, you have to put a payment schedule. Just keep that. You buy raw materials, you pay 75% the month of the sale and 25% afterwards. Then once you put these in, you see we work this out today, you're just lifting. Direct labor comes from sales, and we'll do some lifting and show you how to do that. You just lift out these numbers once you got them in your assumptions. We'll talk about what we do with sales. Administrative expenses, you just lift these numbers out, 2 or 3 minute proposition. Here's your initial cash balance. Here's your minimum required balance. So you can go with most of these assumptions. We're buying equipment with a long-term note. So this will be the equipment that you're buying for your project. Once we do that, there's interest and principal that we'll just lift out. So it is a problem, but in what we're working in and what you're going to be working with is you're going to have to be able to do things like this in a virtual environment with a virtual team. So this is your training, so everybody has to do their part. So I've asked you to try to include people. I'll give everybody a chance to work and participate, but if they don't, leave them out. So if you're satisfied to get a C on your project, you just do the break-even year. Okay. So that's all you want to do. You go through, do the break-even year. The target loss year, you'll be done. If you want to do a B, you got to do the target loss and the break-even year. And if you want an A, you got to do target loss, break-even, and the $1 million year. So you have some options. Any questions?
I have a
Okay.
question.
Yes.
So when you said that to do all 3 years, so that means we have to do the whole entire process, like the production part, the cash budget, do that 3 complete times?
Correct.
Okay.
Okay. So we worked on this yesterday. Would have been good. A few more of you all were in office hours, but I guess you all are busy. So we had a selling price of 100. And so sometimes you got to calculate that selling price based on variable cost. But in this problem, I gave you a selling price of 100. So on the final, I'll probably do that. I'll probably just give you a selling price so you don't have to stress yourself. The collections in this case were 80%. So we said that made the bad debt 20%. So the bad debt will be at a rate of 20%. Then we calculated yesterday the raw materials would be 2 at 10.20. The paper would be 2 reams for book at 4.8. This shows you how the paper's paid for. You're producing 10 books per hour, so we divided and we got $2 per hour as the unit cost. So we're just doing this unit costing again. And our overhead was manufacturing overhead 100, administrative 200, because these were all quarterly. So we added them up. Selling expenses was 20%. So selling expenses is 20% of the sales price, then it was $20. And that's how we got the bad debt. So let me just put 20% here. And so this is actually going to be $20. It's going to be our calculation. So once we looked at our assumption and made those calculations, then the next thing we do is we come to our master budget quantity solutions. And on your final exam, you'll be working with a target loss of 100,000. You bring in your selling price. You bring in, you'll have these same things, ink, paper, and labor. Remember we said 20, 8, and 2. The bad debts were 20. The selling expenses were 20. So the total variable cost was 70. That created a contribution margin of 30, which we utilized to calculate our quantities. Our fixed costs, we just went over those 100, 200, and 100. Your fixed costs are always manufacturing overhead, administrative expense, interest expense. You total those out. And so in the first year, with that formula, 400 minus 100,000 divided by 30, that tells us that our quantity is 10,000 for the first year. And you just done those cost volume quizzes utilizing these formulas. So 10,000 is what you calculate. Then you do a little quick, okay, let me make sure that this 10,000 is going to produce 100,000 loss. So we multiply the sales price times that, we get 1,000,000. We multiply the variable expenses, 70, we get 700. We multiply the contribution margin, 30, we get 300. Or we can take 1,000,000 minus 700 and get 3 million. We subtract out the fixed cost. And so now our number of 10,000, we've calculated and proved that it produces a loss. So that's a good checkpoint early on. With that, we go to the sales receipt schedule, sales budget, sales receipts. These are our sales by quarter. And we bring in that $10,000 that we calculated. We put that on the sales quantity line. So that's what you do with the 10,000. Once you calculate it, you put it on the sales quantity line, and then you allocate it to the quarters, 10%, 20%, 30%, 40% by quarter. Selling price is 100, so your total sales dollars is $1 million, which agrees with that million right here. Okay. And all the sales were credit sales. We made them all credit, so that would make our calculations easier. Our bad debts were 20%. And so therefore, the bad debts by quarter, 20, 40, 60, 80, 200,000. Collections, we collected 50% in the month of sale. 50% of 100 is 50. Then we collected the other 30% in the quarter after sale. So 30% of 100 is 30,000. So we've done this a couple times. 50% in the year of sale, quarter of sale, 30% the next quarter. And we keep sliding it across. 50% in the month of sale, quarter of sale, 30% from the prior quarter. In the first year, this is always zero because there is no prior quarter. And we go through and we do that, and several things happen. First of all, we take this bottom line and we lift that and we take it to the cash budget and we put it on the cash budget. These are our collections. So that's where they're coming. And we're going to get these disbursements in there today. And your beginning balance is 100,000. And we want to keep a minimum balance of 100,000. So that's how we lifted those in. We also said we made journal entries. And I'm going to take this one out for now. Oh, don't freeze up on me. Okay. So I'm going to take this one out from here. Now we'll put it back in later on the capital expenditure budget. So our first journal entry, the cash we started the company with, debit cash, credit 100, credit common stock. We try to use that, whatever we're saying we're using, that's that first journal entry. The second journal entry, we just come up here, that's what these JEs are for, to tell you the journal entries, the credit sales. We debit accounts receivable, credit sales, they're all credit sales. The bad debt, debit bad debt expense and credit bad debt. So the table is telling us how much cash is going to be going on that cash budget, and it's telling us the amount for the journal entries that come with this schedule. So we collected 680, so we debit cash 680, credit accounts receivable 680. And we said we always want to record when we make a sale, the cost of sale, cost of goods sold and finished goods. And we said we use sales quantity times total unit direct materials and direct labor, because we're direct costing and only the variable materials and labor costs are in the inventory. So if you go back up here, ink, paper, labor, 20, 28, 230. That's going to be our the cost that will come out of inventory. And so we multiply that 30 times what? What am I going to multiply this 30 times? Wake up. we're gonna multiply it times the quantity sold, 10,000. So 30 times 10,000 quantity sold. So we're utilizing that quantity that we had to sell once again. So it's going to be a good thing if this calculation is correct. Are there any questions on this sales budget? Joanna, you got these journal entries made and posted for us?
Yes.
Wait, did you go over the I'm sorry, I think it was the principal interest and it was
We
the
hadn't
interest part.
We hadn't gotten there yet. We'll let
Oh,
you
okay.
we'll let you do that for us in a few minutes.
That's not what I was asking, Professor Boyd.
Okay. Production budget. And was this team 2 worked on this or team 4? What's your team, Joanna?
Team 4.
Team 4. Okay. And the first line on this production budget comes from the sales budget. Do we see that? That's the first line. So we bring that line down. Just copy it and bring it down. Our desired ending inventory was what? In our assumption, we said we wanted 50% of our inventory to be produced ahead of time so that we would have inventory going into the next quarter. So let's see if we can do this production budget for them, Joanna. Our design ending inventory, we got to produce what we sell in this quarter plus 50% of the prior quarter. So what's going to go in here? 1,000. Okay. The current sales plus 50% of next sales. So that's 2,000. We had no beginning inventory, 0. So the units to produce the first quarter is 2,000. Is that correct?
The ones we needed?
Yeah, to be produced.
Yes, we needed 2,000.
So the first quarter, you got to produce 2,000. In the second quarter, your desired ending inventory, you're selling 2,000. You got to make that many. Then you got to produce half of these. So that's what, 1,500. So you need 3,500.
Also, the 3,500 goes where the total needed, not where the desired ending inventory.
That's what the total need is.
Okay.
So the total need is the sales plus the desired ending inventory, 3,500. Then we're going to subtract out the beginning inventory. The ending inventory for the prior period, this 1,000 here, becomes the beginning inventory for the next period, just like your checking account. And so we need to produce 2,500 the second period. And we continue with that process. In the third period, we gotta do the 3,000 plus 50% of these, that's what, 2,000, correct? So we're doing the current plus half of the next quarter. So that means we need 5,000. We had in inventory 1,500 from that we'd already made. So we subtract those out and we get how much?
47.
How much?
Wait, Professor, why did you put the 1,500 at the less beginning inventory?
Because we had ending inventory before. And so that becomes, in the next quarter, that becomes the beginning inventory.
Okay.
So first quarter, you didn't have, we didn't have in the beginning inventory because we had just started, but we produced 1,000 of sales and we produced 50% of next quarter sales, 2,000. We made 2,000. And 1,000 of that was for the next quarter. So when we get to the next quarter, sales are 2,000. We already got 1,000 of those made, but we got to produce 1,500 for the next quarter ahead of time, 3,500. 1,000 were already made, so it's 2,500. And we continue that process. The sales are 3,000. 50% is 2,000. That's our design in the inventory. So we need 5,000. Well, we already have 1,500 of them made.
Okay.
So how many do we need? What's this number?
3,500.
3,500. Now let's see if we can do the fourth quarter. And in the fourth quarter, we got to reach into we got to go to the first quarter. Let me get these down. We got to reach into the first quarter of year 2. Because we've got to produce now quantity for the first quarter of year 2. So we got to get a number in here. Well, what's that number going to be? We're going to go back to our break-even year. That's the next year. And we're going to calculate the quantity that we need for the break-even year. We know we got to use a contribution margin of 30. Our fixed cost of 400,000. We simply going to divide 400,000 by 30, and that tells us we need 13,333 for the whole year of year 2. Since sales in the first quarter are 10%, this number is going to be 1,333 for the first quarter of year 2. So does everyone see that? We got to get the number in there for year 2.
13,000.
Is it 13,000?
13,333.
Okay, 13,333 is the total sales, like the 10,000 for year 2. All we've got to do is to get the first quarter of year 2. We don't need the full 13. Remember, we're just going one quarter at a time. So since 10% were the sales in the first quarter, and it was 13,333, we only going to sell 1,333, 10% in the first quarter of year 2. You see that? We didn't sell 10,000, we sold 1,000. So when we get to the next year, it's 1,333, 10% of the total 13,000. So we're gonna need what? Our design ending inventories is gonna need to be what? What's
5,000.
50% of 13,333?
667.
667. So the total need is gonna be 4,667. Okay, so that's just the you got to get, okay, what would I sell in the first quarter of year two? I get my break even total, then I apply my percentage 10% for the first quarter. Okay, so that's 4,667. We already
Wait, how did y'all get 667?
Yeah, 10% of 1333.
10% of 13,333. So the total sales in year two was what? 13,333. 10% of those sales of 1,333 were going to occur in the first quarter, and that's all we're concerned with. So we then take 50% of that, and we get 6,667. 667. So the total needed is 4,667. We already had 2,000. So 2,667 come the units to be produced.
Professor Boyd, you did 1,333 times what to get 667?
50%.
Yeah, one half, 50%.
Okay.
And so what's the total number then that we are producing in year one? What's the total number, Joanna?
The number that goes there is going to be 10,167. Oh, in that one, yeah, 10,167.
I think a little bit more than that. Just my intuition.
Okay, let me do it again. It's 10,167.
Does everybody get 10,167? Why did I get 10,667? What am I doing wrong?
You should get 167 because that 500 and the 667 together will make another 1,000. So you should get 167, not 667.
All right, 2,000.
Oh, my number on my chart is wrong. My number on my chart is different.
You said you got 10,667?
Yeah, if you add these,
Yeah,
how,
the same thing as well.
what?
I have the same number that you have.
I'm sorry, my chart looks different than.
One more
Are you-
time, Professor. You said we do the percentage to get the number.
We're just adding them together. How many were
I'm
producing?
talking about at the top, at the quarter.
What?
At the quarter, where's that quarter? The
Well,
sales right here, the production budget. You said we do the percentage to get the answer.
No, all we did was we went to the sales budget and lifted these down.
Oh yeah, okay,
All we do is lift them. They're the same numbers.
right, and just bring them down to the production budget.
Now we don't do the extra work, Brady. We could go and put 10 and multiply them out, but
Okay,
try and be efficient. So we just lift them and put them down there.
okay.
So I could see that we had to produce 10,000 because we're selling 10,000. Then we needed 6,667 for next year. So I could just look at this and say 10. So as you working with this little check thing, what's total sales? Then what's in this little box right here that I got to have for the next 10? And that gives you the 10,667. Then what we're going to do next, Terrell? We're going to copy these numbers. We're going to put them at the top of raw materials, ink, raw materials, paper, and we're going to put it at the sales budget too. So it's helpful if those numbers are correct. So is team 3 going to lead us through the ink, and then I'll make everybody do the paper. Okay, let's look at ink. Yes, they've been quiet. What's the per unit requirement for ink?
Is ink 20?
I need a unit. How many per unit? How many units of ink is in the assumptions? 1, 2, 3. How many?
Hold on, when it $10 per unit or whatever?
It's 2 units and $10 per unit.
How many ink cartridges were we using? Let me go all the way back up.
Oh, it was 2. It was
It was
2
two.
ink cartridges.
They cost $10 each, right?
Mhm.
Right.
Okay. Okay, so we were using 2 ink cartridges. So how many ink cartridges we got to purchase then? This first quarter.
Is it 4,000?
Yes, it's 4,000. How did you get 4,000?
2,000 times 2. Well, the units to be produced times the per unit requirement.
Okay, so I guess it's 4,000. And our unit cost is what? We just said it was what?
$10.
$10. So our total cost is going to be what?
Hold on.
40,000?
I guess that's 40,000. Is it 40,000, Terrell? Is this yours?
It is 40,000. 4,000 times 10,000. Yeah. I mean $10.
And of course, with this too,
Mhm.
we'll paste it all the way across. And we're going to do the same thing with the 10. So if you're working smart, you see, you don't have that much work to do and you get this done. Okay. So we got to buy $40,000 worth of ink in the first quarter. How much of this ink we going to pay for in the first quarter?
What is it, 50% of it?
What our assumptions say about paying for the ink? We pay 75% in the month of sale and 25% in the month after sale. Y'all should be familiar with that now, paying so much in the month of a quarter of sale and so much in the quarter after sale. We can handle that, correct?
Yes.
Okay, we'll handle it then. How much we paying in the, so this should be quarter, I got monthly. So how much we gonna pay of the 40,000? Calculate
30,000.
30,000. Now, we don't have any of this because, you know, this is new, so this is zero, Joanna.
Okay, so we start off in debt.
No, we don't
There's
have,
no premium.
if you're in your first year of school, you don't have anything you owe. Okay?
Okay.
This is your first semester, you pay 30 down. You wouldn't have anything you owe from the prior semester, right? You
Okay.
wouldn't. Okay, so this cut is working the same way. Now, when we get to year 2, it's like with collecting from year 1, you'll be paying from year 1 too. All right, Terrell, you think you can take it from here?
Raw materials is 5,000.
If I just do it, you know, only I would know how to do it. We got plenty of time today. You know, we going to 7 o'clock, so we got plenty of time.
7 o'clock. Why?
Yeah. So y'all can pass the final exam. I'm just so dedicated.
Oh, wow.
I know y'all professors dedicated like me, just work overtime.
Not at all.
They give overtime work to do.
All right, so what's coming here, Terrell?
The total cost about?
What?
What are you asking me about?
I want to know what number's going in total cost for period 2.
50,000.
I get 50,000.
5,000 times 10.
You need 5,000 raw materials. And you see, you should have formulas set up. You'd have formulas to bring these numbers down. And of course, you put these in, you got formulas to do those calculations. So you work smart, you'll be okay. So what you said is 50,000 the total cost?
Mm-hmm.
So how much we paying?
37.
How much?
37,500.
37,500. Then we got to pay some on the other amount, right? You know, this amount here that you had 40 and you only paid 30.
So we have 10,000.
I pay 10,000.
Which is that last 25%.
Yep. So that gets us to 47,500. All right, y'all go and work. I'm just putting these in here now. Y'all should be able to finish this up now.
Okay. $7,000 times 10, 70,000. 70,000 times 14,000. That's 7,000. That raw material for 3 is 7,000.
So what number goes here, Brady? I guess you'll get their credit. So they're not talking.
7,000.
7,000.
Oh wait.
Oh, I didn't know we were supposed to be
Wait.
talking. I thought you wanted us to work out the problem.
Somebody already had work. Y'all, I'll give y'all 2 minutes. Work on
Huh?
it. I'll give y'all 2 more minutes. Work on it.
Okay.
Finish
Wait,
it.
did you give me the answer? I can tell you the answers. I thought you was.
I have to keep telling you the answer because you already said my name.
Well, this is Dale's, Brady. I'm gonna let you do the capital expenditure budget.
Oh wait, no.
All right, so the total cost is 70,000.
Boo.
The total cost 70,000. How much of that you paying?
52,500.
How much you owe from the last quarter?
What is that? 12,500. 12,500.
So what's our total payment?
65,000.
65,000. All right, go on to the fourth quarter.
That one
5,000.
is, okay, that one is 5,334.
Well, take us all the way through it, Kashan.
Okay, then the next one is 53,340.
What goes in here? How many you got to purchase?
Oh, 5,334.
5,334. So times 10 is what?
53,340.
53,340. Put that comma there. Payment in the month of purchase?
40,000.
You get 40,000.
Is that supposed? Was I supposed to do 53,340 times 75%?
Correct?
I think that one.
Oh, 40,005.
40,000 what?
5.
Yeah, and 5.
005.
Mhm.
Okay. Then how much you got to pay on your old bill?
Um,
$17,500.
how did you get that, Terrell?
The difference between 70,000 and 52,500.
Okay.
25% of 70,000.
So yeah, 70,000.
So what's our total payment gonna be?
57,505.
57,500. And what we're gonna do this bro?
It's
What's up?
505.
It's 505.
Mine says 57,505.
Yeah, that's what I said.
57,505. So what's our total payments then?
Uh,
200,005.
How much?
200,005.
I got 200,005. Nobody else?
Yeah,
That's wrong?
that's what I got.
Okay.
Is that what you got?
Yes, sir.
So now, see if we can copy. Where am I going? Where am I going?
The hell we don't all pray.
You have to put it on the cash book.
We got to do a journal entry.
I would do that next.
Okay.
I need this cash.
The credit.
register.
The credits.
So you put it on the cash book.
You gotta put in
Yeah.
these disbursements, right?
Yeah.
Yeah.
Right.
So you got your first set of disbursements in.
I already got that wrong.
So that's why we're working on it, so you get it right. That the day won't be we won't be in it getting it wrong. Okay, now we need some journal entries. All we do, I'm gonna go up here and find the journal entries that go with raw materials and cash payments. So here are our journal entries. I'm gonna copy these journal entries. And I'm gonna move them down here where we're working. So there are only 2 journal entries. What's first journal entry? Well, we might need a total cost in here. So if we total all of these up, how much is total cost?
It's 213,340.
213,340.
Okay.
So we just put that in the journal entry. We debit, and we put it all in finished goods because we aren't worried about inventories, work in process, and we're just buying enough that we make it. So to simplify it, we put 213, 340.
Yeah. Question, Professor Boyd.
Yes.
So with that, since that those are the numbers for the ink, it doesn't include the paper, the finished good inventory. Will there be multiple journal entries for the finished good inventory?
Yep. Yes, it will be. 213, 340. 213, 340. Oh, and what goes in this next journal entry?
The account payable. I mean, that's
Yeah,
gonna be the total, right? The 200,005.
So how hard was that to do?
Pretty difficult.
10 out of a 10.
What?
Hey, Professor Boyd, why don't you just share your primer on Blackboard instead of us going like trying to find all these different pictures of stuff? Just share the whole primer, sir.
It is a copyrighted document. I can only share selected amounts. I'll try to put this part in for you though.
But when you buy it, it becomes yours.
No, it doesn't quite work that way.
You ain't selling it.
You can't put copyrighted material. You can put some in there, but you're not supposed to put a full copyrighted. But anyway, I'll put that in there. I'll work and I'll put in, nothing works for everybody. So, but anyway, all right, you all do paper.
Okay.
So y'all do the paper, everything, including the journal entries, and tell me what's gonna go. So we've done ink. I want you all to do paper.
Can you scroll back up to the assumptions really quickly?
Up to
Oh, wait.
where?
Yeah, the assumptions. I can take a picture of that.
Problem.
Huh?
I thought I just sent you this problem.
You
All
didn't
right.
include it. Where is it? Paper. Okay.
So you still are paying that 75% the month of sale, 25% the month after. You're using 2 reams of paper per book, and the rings cost $4 each. So put 2 rings, $4. You got that? 2 reams of
Yeah.
paper, $4 a ring.
Can you explain where we get the raw materials to be purchase number?
Say that again.
Can you explain where we get the raw materials to be purchase number? Line 3.
2 times, well, line 1 times line 2.
Oh, okay.
1 times line 2.
So Professor Boyd, just understanding the language a little bit. So since it's 2 reams of paper per book, that means the unit requirement is going to be 2.
Make a decision.
You always say exams and
That sounds like a good decision, though.
huh?
That sounds like a good decision. Trying to prepare you for your final, because you can't ask questions.
Yeah, but this ain't the final, so
So
What are we just
everybody's working on this now. So everybody would know how to do a raw materials. And the best way to know how to do it is to do it yourself. Got it? Does everybody have the sheet here
yes, sir.
to work on? So if I move the page, it's no problem.
Yes, sir.
Let me see. So just for you, Tara, I wouldn't do it for everybody, but I put a master budget insert in there.
I sure appreciate you, Professor Boyd. You're always looking out for the little people.
Professor Boyd, you said we just had to do the paper budget, or we also gotta do the journal entry too.
Of course, the journal entries.
Okay. Professor Boyd, when you document that last journal entry, the cash is the total cost from the paper budget, right?
Correct.
Okay.
So it's the number that's in this box as you add them across.
Okay.
So how much time is it taking to do this little paper budget?
Two per unit requirement is 2.
Oh, you got it done, Krishan?
Yes.
Okay. So 2 and we'll be efficient. 2 all the way across. What's our unit cost?
4.
4. So we copy that. That all the way across. Okay, so Q1, how many raw materials be?
4,000.
Total cost?
8,000.
16,000.
16,000.
Oh yeah, 16. My bad.
How much of this we paying?
12,000.
Zero.
We have a zero here.
Right.
So total payments is 12 because we didn't have any prior quarter we were dealing with. How long did it take to do that?
About 10 seconds.
All right, how much here?
5,000.
5,000. Those here.
20,000.
How much we paying?
15,000.
Here.
How much we got to pay on the old bill?
4,000.
Total payment?
19,000.
How much we need in quarter three?
7,000.
How much it's gonna cost us?
28,000.
How much of that we paying?
21,000.
How much we got to pay on the old bill?
5,000.
5,000.
Payment is what, 26,000?
Uh-huh.
How many are we using in that fourth quarter?
5,334.
Cost?
21,000.
336.
336. How much of that we paying?
16,002.
16,002.
Put that in the wrong place, didn't I? How much we paying from the old bill?
7,000.
7,000.
So what's our total payment for that quarter?
23,000.
How much?
23,000.
23,002.
Yes.
So what's our total payment?
80,000. 8,002.
While we got there, we'll just lift us up. Head to the cash budget. Paste it in. And of course, you can have formulas that do that for you automatically once you finish that schedule. Okay, so we had some journal entries to make. What's in the first journal entry? Guess we need a total cost. What's our total cost?
85,336.
336. So what's gonna go here? 336. 85,336. What's going on the next line?
The 80,002.
Any questions? So if you put these on a spreadsheet, lay this out, then you can have those journal entries come straight in. Okay, direct labor. How we doing on direct labor?
Wait, Professor Boy, I do have a question. Going back
Yes.
up to the paper. So I was getting the first 4 rows numbers, but I wasn't too sure how y'all were getting like payments in a month of purchase.
Okay, remember we're paying 75% of the month of purchase, 25% of the month.
Okay.
So the same thing. We're taking 75%. That's what you pay. We pay the 25% the following month. So 16,000 what we bought, we pay 12,000
Gotcha.
for the next one. That's a good point.
Oh. Okay, because my numbers weren't adding up to theirs. That's why I was trying to figure out how they got those numbers for the payments in the month. Okay, I got it.
Got it now?
I got it.
Okay. Direct labor budget. And notice what? Our unit to be produced is already there. What's our per unit requirement?
For the labor?
Yeah.
One momentum.
Is
Let
it
me go
2?
back to the assumptions.
It's 10 per book, 10 books per hour.
Books per hour.
10 books per hour.
Hello?
Okay. Yeah. That. So the per unit requirement is 10 per.
These numbers off.
2?
You can make 10 per hour. So you can make 10 per hour. How many hours would it take to make 2,000?
200.
200 hours. What's the labor rate?
Oh, I'm sorry, excuse me.
$20.
20.
I get $20.
You divide the 2.
It was done in this case.
So you were hired at what, $40 an hour, and you had to produce 2,000 things, and it took you 200 hours to produce them. If you were hired at $200 an hour, how much do you want to be paid?
2,000.
There's one person wants $2,000 for working.
You don't do the 200 times 10?
Oh, is it not 20?
Ask you a question again, Professor Boyd.
Let me look up here and see. Look at these assumptions right quick first.
Okay.
I want to say the next one.
The assumption say $20 per 10 books.
Yeah, do say $20 an hour.
$20 an hour. Okay. So it's $20 an hour. If you're making $20 an hour, how much do you want to be paid?
A lot.
Well, you only work 200.
So it's 4,000?
So our labor rate is what, $20 an hour?
Mm-hmm.
So wouldn't it be 2,000?
So
Whatever
if you work
total.
200 hours,
Oh, 220. Okay, don't worry about it.
pay $20 an hour, how much for the person?
4,000.
4,000.
4,000.
If you mess this up, your net income's not going to come out right. Got it? You have to be very careful. So what's our total labor hours when we got to make 2,500?
20,
250.
250.
The
Labor
labor
rate.
rate stays the same. I mean, no. Oh, yeah. So that's gonna be the same across the board, Professor Boyd, right?
But now,
But you're saying it's gonna be 20 for all of them.
right, 20 per hour.
And it's gonna be 5,000.
And what are we gonna have this next period? How many hours? How many hours they gonna work?
350.
350.
How much we gonna pay them?
7,000.
7. We're gonna pay them 20. The direct labor is 7,000.
In this final period, how many hours they gonna work?
266.7.
Let's just say 267. They don't have those time sheets to say. Sometimes they do. So $20 an hour, how much is that gonna be?
5,340.
So what's the total payment that they receive?
So Professor
21,340.
Boyd, if I was to have left my decimal and then I got 5,334, would you have given me that wrong? If I left it 266.7?
No, remember we said that at the end of the day, you gotta be within $100 of your.
Okay.
Professor
Weirdo.
Boyd, it's 340.
It's what?
It's
340.
340.
You got to be within $100 of your net income at the end of the day. So let's go
Okay,
here.
so
See what journal entry is
our
required.
total.
Go up here. Go find me a journal entry that's required. And that's a simple journal entry, isn't it, for sales? Direct labor, excuse me. Copy it.
Hey, Professor Boyd, can you scroll back up for a second to the
Okay,
top
let
of this direct labor?
me paste this in right quick.
Yes, sir.
So that's the journal entry. What were you saying?
I just wanted to look at right here. Okay, I see what that problem was at. Okay.
So what's going to be in this journal entry?
21,340.
I thought y'all said y'all couldn't do this. Look like y'all can do it.
Man, you know how you be having like pressure and stuff to do it by yourself.
Where am I going to take this to? So as you can see, we'll steadily put it in what we got to pay. Okay. What's this team 6 with manufacturing overhead? We go up here to our assumptions on manufacturing overhead. It says the manufacturing overhead was 25 a quarter, with 10 of it being depreciation. So we'll come in here, just come here and paste. So this is what, 40,000 total? So what you realize is that the depreciation is not a cash expenditure. We only concerned with the cash expenditure. So how much are we paying?
60,000. Oh well, just for that one, 35,000.
Should I choke her? Total overhead is 25, the depreciation is 10, so you gotta subtract.
Oh, okay, 15,000. Sorry.
So what's the total payment gonna be, Powell? This is yours.
It's about 60,000.
60,000. Thank you, Dan. In there. Okay. So we
I was
done.
on there.
We done.
No.
Yes. How long did it take to do that? This one. We go over here and find a journal entry. Joanna, you keeping up with the journal entries? Where's Joanna? So we just simply come in here and get this journal entry here. So we're gonna do manufacturing overhead for how much? Total overhead was 100,000. We're gonna credit cash for what was paid. We're gonna credit accumulate depreciation for the depreciation. Any questions? Okay, so I want you all to do the administrative expense. It's gonna work the same way. But you all are gonna do it, so go ahead and do administrative expense. I'm gonna go up here and find the journal entries for it. You got your assumptions, go knock out administrative expense. You should have it knocked out by the time I come back with the journal entries. You got it worked out?
No, I didn't work out today.
And you have those administrative expenses worked out?
Yes.
Okay, so what's our total expense going to be each quarter?
500,000.
Say that again.
500,000.
That administrative expense.
Is it the one that says administrative expenses paid quarterly?
Mm-hmm.
Yes, 500,000.
I don't know if it's
Or
500.
50,000. I'm sorry. I added an extra zero.
I hope you don't do that on your project on the test.
9,000.
Okay. How much was the depreciation?
You want the total depreciation?
By quarter, then I get the total.
10,000.
Total depreciation is what? 40,000. How much?
40,000.
Okay. So what are we paying each time? 40,000, right? So the total payments are going to be what?
160,000.
What's this journal entry going to be? Debit administrative expense. So the journal entries are always going to be total numbers. And then the accumulated depreciation. Then we'll take this number here, this cash number. Put it on administrative expense. I'm gonna insert a row above and just copy down our sales. So if I go to the sales budget, so what's my total expense gonna be? How much we paying in the first quarter for selling expenses?
What we at? Selling expense. So it's gonna be 40,000.
I get 20,000.
I said 40.
40,000. I get 40,000.
Cause that's what we. That's the only expense that we did was administrative expense.
Ain't it 20,000?
I get
20
20,000.
20% of 100,000?
Okay, 20%. Remember to sell the selling expenses at 20%. So this is 20,000. What's our next one gonna be, Jenkins?
40,000.
Next one,
60,000.
60,000.
Then 80,000.
No cap.
So what's our total selling expense gonna be?
200,000.
100,000. And let's see if we can go up here and grab a journal entry. And basically, we don't have any depreciable stuff, so we just copy this, copy it.
Professor Boyd,
Yes,
why did you put that on a total payment and not total expense?
it's the same.
So we don't need to fill out both those.
No.
Tracking.
So that's that journal entry. Then we're gonna take this line and what we're gonna do with it.
Copy.
We're gonna paste that.
Right there.
Professor Boyd, can you show the journal entry again for selling expenses?
It's a simple one. Debit selling expenses, credit cash.
Oh, okay.
Will we always do the administrative expenses prior to the selling expenses, or does it not matter?
It doesn't matter. I just did it here because I wanted you all to do it. It should stay in order, but I just wanted you all to be adjusted.
Is all this gonna be on the exam?
Mm-hmm.
Go ahead and post this on the YouTube.
Got time to post yet. It's just 6 o'clock. We have another hour.
What? We started at 4.
Make it another hour. Professor Boyd.
I gotta go.
We need to finish up. We're almost there. Just hold on patiently. Okay, so now we only got one one item left, and what's that?
The capital expenditure budget.
Capital expenditure budget. And we went, and there was something that said we bought, in the assumption, we bought $1 million in equipment with a long-term note. Okay? So we got in the assumption, $1 million with a long-term note. Then I lifted down yesterday the principal payments and the interest payments. So these are all in the assumption. So the total for principal is what?
1 million.
100.
100, yeah. And the total for interest,
400,000.
so we just simply lifted those down. And let's make our journal entries right quick.
Mm-hmm. Come through.
Now on the final, you just do 2 quarters, by the way. You just do the first 2 quarters. So you don't do 4 quarters. If that helps a little bit. Okay, so we purchased the equipment. We're going to debit equipment for $1 million. And we didn't pay any cash down. So credit cash for $1 million. Then we look at our total payments. 100,000 for principal, 400,000 for interest. 100,000 principal, 400,000 for interest. So the total payment was 500,000. The next thing we'll do is that we'll lift these payments. Hopefully they're in the right order. We copy them. And the question is, do we need to borrow any money? So we finished now. Do we need to borrow any money? Let's look at the first quarter. 100 plus 50, 150. If we add these numbers up, how much do we have? Can someone add these up? That's why I asked you to do them in Excel. So if you got them on an Excel sheet, sum them. So what are the total payments?
$246,000.
246. How much cash did you have?
150,000.
So So you need, just to cover that, how much do you need?
96,000.
So how much we gonna borrow? Ending cash balance has to be 100,000. How much do we need to borrow?
4,000.
So if I was down 96 and I need to be up 100,
Is it 196,000?
yeah, that's much better. 196. So you would need 196,000 so you could get to an ending cash balance of 100,000. Then we're gonna take that 100,000. That becomes the beginning cash balance for the next quarter. Okay. And so now we got 230 available. What I want you all to do is go down this row, figure out total payments, where you stand and what you need to borrow.
Professor Boyd, how did you get 230 for cash available?
I simply added the cash to my minimum cash balance that I bought up, plus the 130 in collections for the second.
That's gonna be 291,500.
291,500. So that's 291,500. How much are we down this time?
61,500.
61,500.
Oh, Professor. So the excess cash available over cash payments, what percent is that from the total payment again?
Yeah, the total payment and what you had available.
Right.
But we just subtracted from cash available the total payments we're required to make. How much we got to borrow this time? How much do we have to borrow? This number needs to be 100,000 again. That's our minimum cash balance. So how much might we need to borrow?
161,500.
And 161. You got to borrow how much you down plus what you need. So the 100,000 is going to come back up here again. We collected 210, so now we have what available? 310, right? How much are our payments?
$338,000.
Place. So now, how much are we down?
28,000.
How much we got to borrow this time?
128,000.
That'll get us to 100,000 again. But we are doing too well. Okay. So I got 100 up here, but let's see. Selected 290, so now we got 390. Down payments this time.
$345,847. I think.
5,8. What's Powell laughing about? So, okay, so this time we have what? In excess of cash over payments. How much is that?
345. 47. 44,153.
44,153. So it's 100,000. So how much do we need to borrow?
140.
How much we need to borrow?
144,153. Never mind.
Since we already got 44,153, okay, piece, let's subtract that from 100,000. How much we gonna get to? We just got to get to 100,000.
55,847.
Okay. So if we have a situation where this is negative, then you got to add 100,000 to the number. But if it's positive, but not 100,000, then you subtract. And if this was 144,153, we wouldn't borrow anything. So it's three situations. You got a negative, you're in the arrears, you got to borrow 100,000 plus that number. If this is positive but not 100,000, you're going to subtract 100,000 to get 200,000. And if you had a situation where this was 144,153, you wouldn't borrow anything because you were already over 100,000. So those are the scenarios. I'm just sticking this in here just to let you see each scenario. I forgot that Joanna had a class after this. So does each team have all the journal entries?
Shakana, you took a picture of that? No.
I just took a picture of that.
Okay.
Professor
I think I
Boyd.
got a picture of another one too.
Okay. Yes, Cheryl.
Can I take a picture of the journal? I have all the rest of the stuff. I just need the journal entries.
Yeah, can I see the journal entries too?
But since y'all picture's not gonna look that well, I'm gonna go beyond the call of duty, as I normally do.
And post
And we
it.
appreciate it.
I'm going to put all those journal entries on one document, and I'm gonna put them in Blackboard.
Professor Boy, you know you are
Thanks.
God. You are really godsend. Bless your heart.
Okay. Now, each team, when you get your journal entries, you have to do a trial balance. Well, post them to the ledger, do a trial balance, an income statement, and a balance sheet. So I'm going to do all of that for you all. I'm going to get all the journal entries for you. But each team needs to post the journal entries to the ledger. Just get the Excel, template, post them to the ledger, do a trial balance, do an income statement, and a balance sheet. And if we've done everything correct, that net income will be 100,000 on the income statement. Okay? So I'm gonna pull them together, and that's what we will work on Tuesday. So I'll move your other things back. So all you're working on over the weekend is reviewing all of this and make sure you can do it. But then you're gonna take those journal entries, only about 15. Some of you all have worked with 40 journal entries. So you got 15 or 16. So this should be easy. I want you to post them to a ledger, do a trial balance, take a balance sheet, it should reflect a loss of 100,000. That you'll be watching for.
Professor Boyd,
Your cash on the balance sheet should be this number. So you got two check numbers you're looking for once you get all of the stuff posted, if we did everything right. The cash should agree with this cash. And your net loss should be 100,000. Don't you think that's gonna happen, Terrell?
I hope so. I definitely hope so. Hey, can I ask you? Hey, so can we go over this cash budget tomorrow?
Yeah.
3 o'clock.
We'll meet at 3 o'clock, and maybe we'll try to also work on the other. So we'll go over the cash budget at 3 o'clock tomorrow. And then we'll begin to look at those journal entries and see, are they leading to what we want?
Okay.
Okay. Don't forget to post this tonight.
Are you gonna look at it?
Yeah, I am.
Who's gonna look at it?
Me.
Kiara. KP. Pal.
Okay.
Yeah, I'll look at it in the morning. It's almost my bedtime.